Hello, and welcome to Supporting MU and Helping You, our hopefully informative talk on charitable gift annuities and how they work. Just a little bit of housekeeping. I wanted to let you know that underneath the block screen that you're looking at to view this very informative webinar, you're going to see a little block that says Ask a Question. If you click on that, you'll be able to type in any questions that you have. Arnaud Boutin, who's one of the Senior Directors of Development for Planned Giving, is behind the scenes here, and he'll be fielding those questions to me as the presentation goes forward. We will also have some time at the end we're going to save just to make sure that we're catching everybody's questions and if anybody has any follow-up questions at the end. So I'm going to take myself off screen so you can see the slides better, and we will move right on forward. Again, thanks for being here, and we'll just get started. So our agenda today is I'm going to show you a picture of our Planned Giving team so you can see our friendly, smiling, and soon to be familiar faces. We're going to talk about what are charitable gift annuities and how they work. We've got a few different kinds of CGAs, so we're going to explain the differences between them. We're going to talk about the benefits of charitable gift annuities, and then just a little bit of the process on how they're created because they're really simple. So first of all, this is us. The four of us stand ready to help you with any of your questions about Mizzou, philanthropy, or gift planning. My name is Ann Morgan. I'm the Executive Director. Jen Jennings, Arnaud Boutin, our Senior Directors, and Cheryl Nichols keeps us all in line. So thank you so much for being here, and hopefully we'll be able to chat soon in person. So let's talk about what on earth are charitable gift annuities. Well, it's a really simple contract that is between Mizzou and the donor, where in exchange for a donation, you receive a payout for life. Any funds remaining after the annuitant's passed away are used by Mizzou for purposes directed by the donor. So we're going to get into some of these details. First of all, just in general, we're going to go in three parts here. And I like visual graphs, so we're getting a visual graph here. We have a donor who makes a donation to Mizzou in exchange for a charitable gift annuity. The gift annuity is created, and while the donor is alive, we take that money and put it in a segregated fund with TIAA Caspic, who manages all of our split interest gifts very nicely, and that donor will receive a payout for the rest of their life. Once the donor passes away, Mizzou can then use the funds, they'll take it out of the gift annuity pool and use the funds however the donor had directed, whether it's for scholarships, for the libraries, for sportsy things, whatever it is, that's how Mizzou will be directed and will use it. So let's talk about some of these details. So there's three roles when we're talking about a charitable gift annuity: the donor, the annuitant, and the beneficiaries. The beneficiaries, of course, the people who receive the payout, and then, of course, Mizzou is a remainder beneficiary at the end. This pays income to the beneficiaries for the lifetime of the annuitant. The annuitant is the measuring life for the gift annuity. Term of years, which are available for things like charitable remainder trusts, are not available for charitable gift annuities. A term of years, for example, is instead of lifetime, you just wanted this for 10 years or 20 years until, something happens, either you reach retirement, you don't need this anymore, whatever it would be. Those are not available for CGAs, but they are available for trusts. So if that was something that you were interested in, a charitable remainder trust might be something to explore. At Mizzou, up to 2 annuitants can be on any given CGA contract, and it doesn't have to even be the donor. When it isn't the donor, what we most often will see is that a donor will create it for a spouse or a child or for a parent. And so the donor would be different than the measuring life of the annuitant. And you can have it as joint and survivor or one to the other. So for example, 2 spouses create a charitable gift annuity. They're receiving the money together while they're both still alive. If one person passes away, the survivor continues to receive those payments. Or you could create it so that for the so you create it on your life, but you have the payments going to your mom for as long as she's alive, and then perhaps to your sister after your mom passes away. The funds are invested in that gift annuity pool, again, until the last annuitant dies. So we don't use any of that money until there are no more lifetime payouts to be made. The payout rates are based solely on age. There's no medical test to go through. There's no complicated forms to fill out. Just a pretty simple CGA application. And if you're within 6 months of your next birthday, you get to take advantage of that higher rate that's available. Charitable gift annuities at Mizzou, you can use cash or publicly traded securities. Now, you'll often see this referred to as appreciated stock. And the reason that we talk about appreciated stock is that if you use appreciated stock, which means it's worth more now than what you paid for it, then you're going to avoid some of that capital gain recognition that you get taxed on. Everybody likes to avoid taxes, right? And if you're using depreciated stock, which means it's worth less than what you paid for it, you don't get that same tax advantage, because if you just sold that depreciated stock, you'd be able to take that loss on your tax return. You wouldn't be able to do that same, recognize that loss if you created a CGA. Another really exciting thing is that the donor gets an immediate tax deduction for the amount that's calculated to come to charity. Now, again, what's really exciting too is that the payout rates, the payout that each person receives, is some of that's tax-free. And then after that, the portion of the payout's taxed in relation to the type of property used. For example, with cash, it would be ordinary income property, or ordinary income taxation, excuse me. And if it's appreciated stock, then you would receive some capital gain income at a nicer tax rate. So let's look at this. We're going to look at a couple of illustrations later on, so it'll parse that out a little bit more easily in a way that's probably easier to understand than just me talking about it. But first, let's talk about the 3 different kinds of CGAs that are available at Mizzou. They're differentiated by when do you start receiving your payments. If you start receiving your payment immediately, which means within the first year, then you get the standard CGA payout rate that's determined by the American Council on Gift Annuities. If you decide to take a deferred payment, which means the payments start in more than a year after that 1-year mark, then there's a higher payout rate based on how long you're actually deferring that first payment. And you'll see it illustrated on the financial illustrations we're going to look at in a little bit. Flexible payment. This is actually a pretty exciting CGA. This means the donor can choose from a selection of start dates with this higher payout rate based on deferment. You do have to wait at least a year to start receiving these payments if you're doing flexible payment. But what's exciting is that you can decide at the time the payment is, from one of the choices, you can decide at that time whether or not you were ready to start receiving payments. So for example, say you're 60 years old and you're like, well, I might want these at 65 to get paid out at 65. I might want to wait till 70. I don't know when I'm going to need the money more. So what you can do is say, okay, well, at some point between age 65 and age 70, I will be taking the payout. And so once a year from age 65 to 70, you're going to receive an option to start the payouts that year. If you decide to just wait, at the last year, you will have to start taking payments. So you can put it off for as long as possible and get the higher payout rate if you desire. So let's look at these illustrations. This lays out the actual benefits and how the money is looked at. Depending on what kind of assets you're using, there's a lot of variables. So this is just an illustration on somebody who's age 76, who's using cash at $25,000 to create their charitable gift annuity. Age 76, it's a 6.8% payout rate. And that means their annuity every single year is going to be $1,700. This annuity amount will not change over time. It's going to be $1,700 every year, because it's not calculated every year like a trust is. It's calculated all at the beginning. What's really exciting when you're looking at this, though, for me, is that your charitable deduction on your gift of $25,000 is going to be $11,178. That's an immediate charitable deduction you can take as soon as you create the CGA. Now, the tax-free portion, you'll notice, is $1,171.30, and the ordinary income portion is only $528.70. This means that almost 2/3 of the annuity that you're receiving is tax-free. So you're only paying taxes on that $528.70. Now, if we move forward to a stock gift, we're looking at someone who's age 72. So the payout rate is 6.2%, slightly lower than if you're age 76, which makes sense because, again, the payout rates are based on age. This time, the person donated $100,000 worth of stock, and they had paid $50,000 for it. So let's take a look at how that affects the financial side of these things. So the charitable deduction you can see is $41,510. The annuity itself, you're now seeing three different kinds of income: tax-free, capital gain, and ordinary income, and it's divided roughly in thirds. So this is the tax-free portion of about $2,000 and the capital gain income of about $2,000. Ordinary income would be $2,163.80. So the reason that you're not recognizing all of the capital gain income, you'll see it says total reportable capital gain of $29,245 must be reported over the 14.5 annuity lifespan. You'll notice that that's less than the $50,000 of actual capital gain. Well, the reason that it's less is that some of that capital gain is ascribed to the charity, to Mizzou. So if Mizzou paid taxes, Mizzou would have to pay taxes on that, but we don't pay taxes. So that is an increase in value for your charitable gift annuity that is not taxed. So finally, let's look at a deferred illustration. You'll notice there's a big difference between somebody who decides immediately to take the payment, which is 6.2% for somebody who's 72 years old, and it jumps to 8.5% by deferring the payment for just 5 years. So instead of getting it at age 72, getting those first payments at age 77. Now, I just ran a cash illustration for this because I just wanted to show you more about the difference in rates. Then I wanted to show you all of the benefits of donating stock. But with that 8.5% payout rate, you also get this charitable deduction of $55,000, which is more than the charitable deduction you got with getting the immediate payments, because again, it's about time value of money. Your annuity payment is, of course, $8,500 every single year. The tax-free portion is about $4,000, and the ordinary income portion is about $4,445. So one of the questions that we have, I can see Arno posted to me, is can you add funds to a CGA? No, you cannot add funds to a CGA. What happens if you want to do another CGA, you just create another CGA. The advantage to that is that presumably you would be older, and then you could take advantage of a higher rate. So there are so many benefits to a charitable gift annuity. We already discussed the immediate tax deduction for the amount calculated for charity. It is a guaranteed income for life. There's capital gains tax avoidance and tax-free income. And the donor gets to decide how Mizzou spends the money. So you would just tell us that this is what I care about at Mizzou. This is where I want this money to go after I pass away. You can use cash or stock for a CGA. And new just this year, there's new tax laws that allow qualified charitable distribution to create a charitable gift annuity. And we're going to dig into that a little bit deeper, because if you're over the age of 70 and a half, this might be something you're interested in. And of course, if you create a charitable gift annuity, you are enrolled in the MU Legacy Society, which is our recognition society for our plain giving donors, and possibly the Jeff Club, depending on the amount of the gift annuity. So just a little bit of an alert here. The minimum donation is $25,000 or greater. The minimum age for immediate payout is 60. The minimum age for deferred is 45, but you have to wait till you're 60 for payout. So if you create it age 45, age 50, age 55, you would have to defer those payments until 60. Now, a 15-year wait from age 45 to 60 would net you a really nice payout, just saying. The MU Legacy Society, got to do a little bit of a plug for that. It is our campus-wide recognition society for people who've made a planned gift to Mizzou. We celebrate our members and we keep you informed about the university through regular communication. We also have a nice little thank you gift that we will give you upon enrollment. So let's talk about qualified charitable distributions. So this is a special provision for IRA account holders to make charitable gifts to qualified charities. Mizzou is a qualified charity because we are a Section 170B1A. We are an educational institution. Sometimes you hear people talk a lot about 501c3s, but there are more organizations than just 501c3s that can receive a qualified charitable distribution. Now, there are a lot of rules around this. It can only be done through a traditional IRA, SEPs and Simples, and you cannot be continuing to give to those IRA, SEPs and Simples. You can't. You have to be at the point where you're actually ready to withdraw. There's a $100,000 limit per person per year. You must be 70 and a half or older. Now, a lot of times people connect these with their required minimum distributions because it used to be you had to be 70 and a half to take your required minimum distributions, and those ages have changed. So they kept it for qualified charitable distributions, though, that you only have to be 70 and a half or older. It has to go directly from the account to the charity. It can take a little bit to transfer the funds depending on how fast your IRA administrator works at it. You get a special receipt because there's no tax deduction for this. Because this is fun, these are funds that never were taxed in the first place. You don't get to take a tax deduction for them. Now, here's the good news. For 2023, you can create a charitable gift annuity up to $50,000. You can do this once per lifetime for each individual person. So if you have more than one IRA, then you can still only create one CGA for $50,000. And you can't create more than one CGA, even if you don't use up the whole $50,000. So say you only want to do $25,000 here and then create another one for $25,000 somewhere else, you can't do that. And of course, there's no goods or services in exchange for creating this CGA. So here's a couple key points. So as we discussed, there are no tax deductions, there are no tax-free income. It can be once per lifetime. If married, can create a 2-life CGA with spouse. And the nice thing is, if both spouses have IRAs, then each spouse can create a $50,000 IRA jointly with their spouse. Deferred payment options are not available with this. It has to be immediate payout. And of course, reminding you, the limit is $50,000 per person. Arno, I'm not seeing any questions as yet. Let me know if anything comes. Oh, and now one just came up. Can I set up a bequest in my will that will fund a CGA after I pass away that will pay an income to both my nephew and niece? Actually, that's a really good question. I've never seen that, but I can't imagine there's a reason that you couldn't. A lot of it would depend on who the annuitant would be. So, and whether or not those annuitants would meet the minimum age tests. Definitely the person could set up a trust, and especially if the people that would be the measuring lives would be too young to do a CGA, that might be something to consider. So the procedures for creating a CGA are actually pretty simple. And if you want to see how you personally can benefit from a CGA, we're happy to run illustrations for you whenever you would like upon request. When you're ready to move forward, we just send you an application and you fill it out, you sign it, you send it back to us with a copy of a government issued ID. And if you would like direct deposit, have that document filled out. And if you're paying cash, then a check. If you're donating stock, then once we receive your application, we'll direct you to go ahead and transfer the stock. We'll give you our DTC instructions. And of course, if it's a qualified charitable distribution, the donor would initiate that with their IRA administrator. If you have a checkbook IRA, you can also just write a check and that would be fine too. So once the application and funds are in hand, we create the contract and we send that around for signature. And once everyone signs, an original goes to the donor and then one goes to TIAA CASPIC. So in summary, there is an immediate tax deduction at the creation of the CGA. I'm going to pause for a second here and remind you that we're getting close to the end. So if you have any questions, please do type them in and Arno will make sure that I get them to answer them. So immediate tax deduction at the creation of a CGA. It's a guaranteed income for life. There's capital gains tax avoidance, tax-free income. The donor decides how Mizzou uses the funds, can use cash or stock for a regular CGA. Our special new laws allow a qualified charitable distribution to create a charitable gift annuity. And of course, it's qualification for the MU Legacy Society and possibly the Jeff Club. We do have another question. Can a CGA fund an endowed scholarship when it's done paying out an income? Absolutely. In fact, that's honestly the most common way at Mizzou that the remainder is used, is to create endowed scholarships especially. But it can be used for anything you would like at Mizzou. Okay, do we have any more questions at this point or no? Gonna give it a couple of seconds. Can I outlive my CGA? If the person is if the annuity is on your life, then no, you cannot outlive your CGA. Your CGA will make payments for life. Even if all of the money that you donated is used up, we are under contractual obligation to continue to make those payments until you pass away. So that's a really great question. Okay, well, thank you all so much for your time and attention. And here is how to get a hold of us. I'm going to make it bigger so everybody can see it a little bit better. We are at 302 Reynolds Alumni Center at the University of Missouri campus in Columbia. You can also reach us. We have a great new website that just went live a couple days ago, giftplanning.missouri.edu. And you can also email us at giftplanning@missouri.edu. We do have an 800 number, 1-800-970-9977. And Arno and I both thank you so much for being a part of our presentation today and hope you have a really great day.